Memes are heating up again. Everybody wants the 10x in a day, the overnight flip, the lottery ticket. But what most people don't understand is that those returns only mean something if you build the right portfolio to withstand the volatility. Today, I'm breaking down the exact portfolio framework that I teach inside of my inner circle. This is the same framework that I've used to grow through multiple cycles. It's the same framework that I give my clients who've made over 6 figures while protecting their downside and minimizing their risk in meme coins. This is what keeps you from being exit liquidity. This is how real operators move. Let's get into it. Yeah, memes are heating up for sure. I don't think it's going anywhere. Tension economy, like the whole thing. Obviously, the main premise is memes are where we get these like astronomical returns. It's completely asymmetrical. Where else are you going to get 10x's in a day, in a week even? That's what a lot of people know, and that's what a lot of people go for, but they don't like construct their portfolio accordingly. Like if you're all risk on, that's not the proper way to build a portfolio. Long-term growth. You hear a lot of us traders talk about stabling up. You hear a lot of us traders talk about rotating into Bitcoin, buying dips, all of those things. And I'm gonna show you kind of like what that looks like, because I think that's important, especially now. This is like a good foundation. Now, here's the thing. Everybody wants to make it, but here's the best move that you can make. And it's going to sound simple, but even outside of my thesis and my conviction, what you want to make sure you do is build your own conviction of the direction of the market in the next 1 to 2 years. If you're constantly flip-flopping back and forth on every single correction or random tweets that you read, you're most certainly not going to make it. You have to kind of sit back, log off of X, turn off the headlines, read the data on both sides, like the full bull case, the full bear case arguments, and choose your long-term bias, choose your thesis. Stick to it. Define your own validations as well. Like put your own lines on a chart. And this is how you don't become exit liquidity. Too many people sway and turn just based off of price and what everybody's saying and what the headlines are. That's how you become exit liquidity every single time and make emotional decisions. You have to have your own bull case, something that you're sticking to for the next year, 2 years. I've heard it all. Like I've heard the biggest bull cases, I hear the biggest bear cases, but I still stick to my own thesis. I trade accordingly. Always have. So with that being said, let's say you are a bull. I'm a delusional optimist, but there is some merit to it. You know, we got so many bull cases going into 2026. Trump just announced the 2K stimmy checks. You guys saw last time that happened in 2020. That was the craziest bull market. When the money prints, people like to buy Bitcoin. People like to buy crypto. Like crypto is like the craziest hedge. New Fed chairman in May, and apparently all the rumors lead to Trump choosing his spokesperson for that. More interest rates cuts has been on the horizon. Everybody's speculating on that. Nvidia, this whole AI bubble everybody's talking about. We already seen all-time highs on stocks. There's this whole Clarity Act that's going to bring some more structure and clarity on the whole crypto framework. So for me, I mean, there is a strong case. Maybe we possibly bottomed today. Who knows if we go in the 80Ks ever again? Even if not, that doesn't really change my bull case, because I'm always going to look at it as a gift because of my thesis. I'm always going to look at it as a plus. I'm happy on red days because, again, you're not exposed enough. You're not exposed enough. So with that being said, build your own bull case or bear case, right? Because, I mean, if you got a bear case, you'll probably structure up your portfolio a little bit differently. Maybe way more money parked for when your target areas reach, or whatever the case is. But you definitely don't want to be swayed by the headlines, because especially a week like this week and last week, it's all headlines. It's all fear. Everybody's just all over the place. You got to keep your head on tight. Now, I call this the portfolio pyramid model. Basically, you want to have your foundation, and I'm going to go over what that is. You're going to have your foundation, which is going to hold most of your portfolio. You're going to have your growth pillar. You're going to have your speculation pillar, and you're going to have your parked pillar, okay? And there's different ways. You could have like an aggressive portfolio. You can have a conservative portfolio somewhere in the middle. Now, the goal of this is so that you're not scattered, emotional, hopium driven, and you're more structured, conviction-led, risk-aware, capital efficient, emotionally stable, and you turn from consumers of hype to operators of a system. Now, why do most people lose? Over diversification. You're holding 19, 20 coins, and that's just guaranteed your performance. I've personally always kept a handful of open trades. Number two, oversized bets on memes. They think 40% memes of their entire portfolio is high conviction. That's way overexposed, way too much risk for your portfolio, and it's just undisciplined gambling at the end of the day. No rotation. They stay stuck in losers while winners run, right? And their money's just all tied up in the red. Entry timing is random. They buy pumps, they chase hype, and they act on emotion. No appropriate weights. They put more into memes, for example, than something like Ethereum. More into memes than something like Zcash. Memes, something like Bitcoin, all right? They don't let winners run. They take profit too early and they bag hold the garbage. And then even a bonus, I would say trying to quit or just go full-time crypto way too early. They try to rush that process way too fast. So here I'm going to show you how to set up your foundational layer, growth layer, speculation layer, and your park layer so that you can last longer through multiple cycles, right? So what is the foundation layer? Now, the foundation layer is non-negotiable, and this is going to make up 50 to 70% of your port. Now, the purpose of this is that it protects your downside, it compounds over time, it absorbs the volatility, and it gives you exposure to entire crypto economy. So you hedge against macro risk and fiat erosion. That's why a lot of people choose Bitcoin. That's why a lot of people choose Ethereum. Now, Bitcoin is the biggest macro hedge, fixed supply, institutional flows. Ethereum, all the altcoins, or most of the altcoins are built on Ethereum. So it's like having an app store and all the apps, like you're betting on the app store here. Like this is the whole ecosystem. Global app layer. Solana, high performance, mass adoption change, Bex UI, mass onboarding pipeline, and obviously we know the memetic culture. I just recently added Zcash to it because I think privacy is just important. The strongest privacy asset, battle tested with zero knowledge tech and a narrative that becomes more important over time, especially in a world of increasing surveillance and capital control. Now, on the AI 16, the Andreessen article that I've been referencing more and more, you can see crypto's multi-chain, but out of all of the chains, you see Ethereum and you see Solana and you see Bitcoin with the most developers and the most open source developers. So most developers are building on those. That's why I think that's key to be on Solana, Bitcoin, Ethereum, and even Zcash as your foundation. Institutional capital is flowing into crypto. Bitcoin and Ethereum ETFs hold over 175 billion in on-chain assets and growing. Just insane. Publicly traded treasury companies have burst onto the scene, now holding billions of dollars in crypto as well. Now, all of these companies, you got MicroStrategy, you got Ford, you have SBET, all of these guys, all their main holdings are Bitcoin, Ethereum, Solana. That should tell you something. Follow the money. That's always been my motto, follow the money. The reason why I got into crypto in the first place was I was just following the money. Now, as crypto reaches more mainstream users, the need for privacy is more urgent than ever. Zcash supply and shielded private pools has been going nothing but up. And I mean, even just more recently, it's insane how hockey stick the chart looks on privacy right now. Privacy related Google searches are at an all-time high. We've just seen they're trying to pass some AI framework to find people's crypto on offshore accounts and all of these things. It's like everybody wants to just operate in privacy pools now. So this layer is not optional. You accumulate them, you hold them, and you let time do what it does. If you skip this, you're trading on the hardest mode in crypto. Now, I have clients, I have people that I work with, even just my realtor, for example. He's up over $500,000. He's been working with me since, I want to say 3.5, 4 years now in crypto, just helping him build his port. He's an older guy. He started with 20, 30K. I forget what it was. Wasn't a crazy amount of money. And the crazy thing is, all I did is help him secure his crypto with a ledger. Not a lot of people know about crypto security. So I helped him with crypto security, helped him build and structure out his port in this exactly what I'm showing you, except he's conservative to the max. He doesn't even really do meme coins. He did Trump, but it's like, that's it. And that's because it's Trump, you know? So it's like understanding time can be on your side in a really big way. He's up multiple six figures from starting with small multiple 5 figures. His main bags is Bitcoin, Ethereum, XRP, Solana. And we've rotated into altcoins here and there. We did Render, remember last year, that was like a nice 3x or whatever, and like a few altcoins here and there. But we rotated out of the weak ones, mostly back into the strong layer ones. He's locked in just on his foundation layer mostly. That's just like a crazy example. It doesn't have to be so crazy. Growth layer. These are the horses you bet on when momentum is building. This is going to be 20 to 30% of your port. So this should be supported by something real. Adoption, a clear narrative, strong fundamental, high dev activity, growing volume, social and liquidity acceleration. What is an example of that? Hype. It clicks all of those boxes. Adoption, we all know what's happening with decentralized exchanges. Strong fundamentals, we know the hype buybacks, they made that whole thing popular. Dev activity, I mean, bro, hype is like the cleanest UI, cleanest tech out of all the dexes. Growing volume, social liquidity acceleration, right? Hits all the boxes. Aster, first mover, they're adding privacy. You guys know the hidden pools and all of that, dark pools, AI infrastructure. Privacy coins like Zcash, Rail, it hits all of these boxes, right? DPIN, Filecoin, Render, Helium, DOT, AMP. Those are all examples of growth layers that can easily 3, 5, even 10x in some cases, and you rotate it right back into your foundation. Now, the purpose, outperform majors during mid-cycle rotations, increase your BTC and Ethereum stack, and be ready to rotate out at any time. Now, again, hyperliquid, perps, futures became a popular product among crypto speculators. This is leading the way. Revenue generates more than 1 billion in annualized revenue. Hyperliquid. The DeFi industry is growing. Crypto trading is shifting from centralized exchanges to decentralized exchanges. Now, guys, like we caught that whole playbook. We caught the whole DEX playbook live in the inner circle, the whole Aster trade. That was the whole reason behind the Aster trade. The privacy meta, like the statistics back it. The adoption is there. The narrative is clear. You know, it's just, are you ready and is your portfolio structured for these things to happen or for you to catch the upside when these things happen? Because it's not if, it's when. And it happens a lot. Like the opportunity is just abundant. Now, decentralized physical infrastructure networks, DePIN, are gaining traction, leading to a new generation of user-owned services. Helium, for example, decentralized networks of hotspots. Render, another example, like people, that's like a decentralized way to share computer space. And these will all fall under your growth layer because we're at a time now where altcoins don't do what altcoins used to do. Like altcoin season is a lot different. You got to spot the clear narratives, the fresh narratives that make sense, that are actually getting adopted, because a lot of people who were holding or bag holding certain alts from just even last cycle are just sitting in red because people move on fast. You're not sure what's going to stick. So the purpose is you rotate into these, don't marry them, then you put them back into the foundation layer when they've done their job. Real quick, before I keep going, let me say something important. A lot of you watching this are trying to do crypto alone. You're scrolling X, watching random influencers, bouncing between hype and fear, and that's exactly how you end up exit liquidity. If you want to actually level up, like really level up, you need to be in a room where the information is accurate, the strategy is proven, and the people around you are actually winning. That's why I created the inner circle. This is where I break down my portfolio in real time, my rotations, my entries, my invalidations, and the exact thought process behind everything I do. It's where I give the trainings that never make it to YouTube. It's where people get their first real multi-cycle plan instead of gambling every single week. If you're serious about sticking around for the whole cycle, if you want mentorship, structure, and an actual strategy, and if you want to stop blowing your port every few months, then click the link below and apply for the inner circle. We have people like Flacco, who became a profitable trader in just 2 months with trading meme coins, from being down 1,600 to making over 5K in profits within 60 days. Or Justin, who started with 50,000 and doubled it in the first play we gave. It's not for everyone, but if you're watching this video and you feel like you've been missing guidance, this is the guidance. Let's get back into it. Now 3, speculation. Max 10%. This is where you're taking swings on memes, micro caps, narratives, but only with discipline, right? So the rules is never more than 10% of your port. There's no reason. This is where asymmetrical returns live. Like, you don't need more than 10% of your port. This will probably grow your port faster than any other. You enter early or you don't enter. You flip, you don't marry. You cut instantly on invalidation and only re-enter if structure reclaims. All right, so use clean entries, tight stops. Always assume that they can go to zero. In fact, they will. Now, why this layer exists? Massive asymmetrical upside, culture over fundamentals, perfect for compounding quick capital, but only when managed like a sniper, not a degenerate. Examples: SPX 6900, Doge during height, useless, Uranus, troll, if played properly, not bag held. And you guys seen how we went play by play by play in this group, how we caught useless, how we caught Uranus, even troll back in July, Pico bottom. At this point, we've taken profits on pretty much everything and even re-entered Uranus, ran it up again. You can see now in retrospect why I played it the way I played it. More so because memes is just so volatile and I'm just so aggressive with taking profits and just putting it into my foundation. That's just a big key. Now, you can see over 13 million meme coins have been launched in the past year. That's crazy. A symptom of crypto's lack of regulated market frameworks, right? So while it's here, I don't think it's going anywhere. SEC already kind of labeled it as like trading cards. It's just collectibles. People know the risk. It's important that you don't put more than 10% of your port inside memes, especially if you want to live long term and catch the full swing of what crypto has to offer. Cash layer, this is your park capital. This is stable coins, just because this is the easiest way. Like, you don't want to park your money that you want to deploy in your bank, because then there's a bunch of obstacles that you got to go through. USDC, USDT, whatever you prefer. Now, the purpose: catch generational entries, buy major dips, rotate quickly into strength, avoid being fully locked in during red days, and maintain optionality and control. When to deploy: clear invalidation wipeouts. Things like October 10th, for example. What did we do? We bought. There was nothing but opportunities. Times like now, everything's getting wiped out. High volume reversal candles, aggressive market-wide flushes, fresh new narratives with momentum. This allows you to let anyone else panic while you stay equipped. Everybody's panicking, everybody's losing your head. What are you doing? Buy more. Locked in, because this is what's going to give you kind of like a clear head. Now, essentially, you can pick where you want to be on how aggressive or conservative you want to be. Like I said, even myself, I'm moderate. I'm in between. I'm not super aggressive, but I'm not super conservative. I told you that example of one of my clients. He's super conservative. Even on his speculation, it's mostly just cash parked. He's not really doing memes. It's not his style. Better for him, right? Because time is just working in his favor. And even better. Even myself, I was actually always more conservative from the beginning. Since 2019, I was always just building my foundation. Even that first wave of memes, Floki, all of those, you guys know how the cycle goes. It's Bitcoin, then it's Ethereum, then it's alts, then it's meme coins. That first run, it was like, I'll put, okay, $2,000. And I was like, nothing. And then boom, it was like 40 grand. Okay, give me that. Like, it was always mostly foundation more than memes. That was always the case. Now, you can have 70% foundation, for example, 20% growth, 10% speculation or less, 60% foundation, 25% growth, 10% speculation, 5% park, or you could go super aggressive, where it's just 50% foundation, 30% growth, 15% speculation, 5% park, right? But I think this is the framework of how you want to build your port. Obviously, you can edit it however you want, but it's kind of like guardrails. I've noticed a lot of people aren't really focused that way, and I would even add, like, not having a million different trades open at once. Just a handful for each pillar is more than doable. It's a lot easier to have conviction and follow a trade when you're only in 2 to 3 trades, especially in your speculation. Build conviction, 2 to 3, 4 trades max that you're holding or flipping or whatever the case is. You don't want to be in a whole bunch of different trades, because then it's harder to manage, and then you could more easily fall into your emotions, and then you just kind of give up on your port. You're just like, if it comes back, it comes back. And that's not trading. That's just kind of hoping. Take note of this. Take note of this and start building your port seriously. This is what's going to help you stay straight when things are going crazy. It's going to help you see the silver lining. Every once in a while, just somebody just screaming, the sky is falling, it's over. Is it a bear market? This and that? Doesn't matter. What matters is that you build your own thesis. You build your own plan for where you see this market going the next 1-2 years, and you follow that, regardless of what the headlines do or say, because it flip-flops every other month anyway. That's how you end up like exit liquidity, and that's how you build your portfolio. Now from there, we can lock in and go crazy. I got a few other trains like this I'm excited to share with you guys, because people ask me all the time, what are you going to do when it's the bear market? Well, what happens to rage on a bear market? I don't know, bro. Every single bear market, I stuck it through. It was a bear market 2019, 2020, like all the way up till it went crazy. And if I wasn't in the markets at those times, when it wasn't crazy, it wouldn't have went crazy for me. And it's the same thing now. Crypto's not going anywhere. Memes are clearly not going anywhere. Even if it's low volume, there's still money to be made. So we're going to be locked in regardless. And I'm pretty excited for whatever happens next. If you want access to the full systems and weekly trainings like this, or if you want me to help you structure your portfolio based on your situation, apply for my inner circle. You could be like John, who started with 25,000 and already built to multiple 6 figures and built a solid long-term portfolio. Or many other students ranging from just 10,000 to hundreds of thousands who seriously want to run it up this cycle. I see crypto accelerating all the way through to 2027. It's time to lock in. I'm gonna be going hands-on with you. Go ahead and apply with the link below. I'll see you guys on the other side.